Welcome. You are listening to Purpose Driven Wealth, the podcast for empowered investors. If you're an investor who is tired of playing the Wall Street casino, stay tuned. On this show, we bring on industry experts to discuss leading strategies to help you make empowered decisions with your hard-earned capital. And now, here is your host, Mo Bina.
Welcome to Purpose Driven Wealth. I'm your host, Mo Bina. Today on the show, we have Chris Desi. Chris is the Chief Revenue Officer at Diamon Standard. He's a renowned serial technology entrepreneur, author, and TEDx speaker. He regularly appears on CNBC, CNN, Fox News, and other media outlets. Chris, welcome to the show.
Thanks for having me, Mo.
Yeah, thank you for coming on. Chris, you've got 23 years of experience in the technology sector. Could you please talk about your mindset and kind of your approach to navigating such a dynamic field?
Oh my goodness. I should mention that getting into technology was arduous. So I have an undergraduate degree in psychology, and I spent a year studying abroad in Leuven, Belgium. So I went to Loyola University from Baltimore, Maryland, spent my junior year in Leuven, Belgium, studying business. And I got A's in those classes. And I came back and I was like, I want to change my major to business, to my dad. And he was like, no way, you got one more year left in school. You're not changing your major and staying there for 5 or 6 years. So my father advised me when I sat with him after I got my undergraduate degree in psychology from Loyola, and I told him that I really enjoyed business and wanted to pivot. You know, he spent 2 hours with me in our living room with a flip chart, asking me what I liked and what I didn't like. And he's like, okay, this is interesting to me. This sounds like it's marketing. And he advised me, well, I wanted to be a dot-com millionaire because this was, 1997. And he advised me to get my master's degree in direct marketing because the internet, in his words, was, direct marketing on steroids. And that was the best advice ever. When I got out of, it was a 2-year program. When I got out of NYU with my master's degree in direct marketing, I got a job at Time Inc. And I was kind of like, I'm too young to retire. That's a different kind of vibe for me. I really want to do this tech thing. And my first job in tech was, I started on Valentine's Day 2000 at a company called Mediaplex, which was third-party ad serving. And man, it was a crazy ride. My mindset was learn as much as possible. My mindset was have as much humility as you possibly can and be the hardest worker in the room. Part of that was because my father had advised me in that career path, and I wanted to do well by his name. And the other part was, my cousin Joseph helped me get that job at Mediaplex. Lots of people helping me out. So my mindset was always don't let them down and be the earliest, the guy to get there the earliest in the morning, the guy to stay the latest at night. And don't be afraid to roll up your sleeves. And that served me really well because Mediaplex, it's kind of a funny story. When I started on Valentine's Day, the stock was trading at $88. A year later, when they did a massive round of layoffs, it was a penny stock. So it was a screamer down south. When you're 24 years old and you get laid off, you learn a lot about yourself. You learn a lot about your character. You learn a lot about how to pick yourself up by your bootstraps. You learn a lot about, again, humility, and then getting back in the saddle. So everything that I've done in tech from a sales perspective, marketing perspective, leadership perspective has been about knowing that it is so complicated that you can never be a master. You can never be a guru. Whether that be self-proclaimed or otherwise, and that there's always a 16-year-old that's smarter than you in their parents' basement developing something that's going to change the world. And man, that's a fun way to approach things, right? I know that that's kind of your mindset, right? This is why you do this. You're looking to learn more and to enhance your listeners and viewers' portfolios by educating them. And that's what it's all about, right?
Yeah, definitely. And, like you mentioned about just wanting to learn as much as possible and putting in the time and effort to do that. These are traits that unfortunately seem to be harder and harder to come by these days in our society. So it's refreshing to hear that.
Well, I hear a lot about people talking about like follow your passion, which great, that's fine. Follow your passion, what you love. However, there are lots of steps to get to that, right? I'm sure you would have loved to have done a podcast 15 years ago, but perhaps you didn't have the resources to do it, the time to do it. And I think people that understand that they need to do the highly laborious, monotonous, brutal day-to-day work that builds the foundational elements to get to the point where you then can comfortably pursue your passion. I think that that's a more appropriate mindset. And, you know, I'm 48 years old. You said, you know, like you said, I'd been in tech for a bunch of years. I'm not afraid to do the work that could be deemed, you know, for a junior executive. And I'm, you know, happy to do every layer of work. And I think the people that I'm lucky enough to be colleagues with, especially at Diamond Standard right now, that is absolutely everybody's mentality. You know, being in a startup ecosystem at a fintech where you get the best of the best that are all in a new business that is a unicorn, that is opening up doors that hadn't been opened before. You get a unique executive. You get executives from every walk of life that is pushing themselves, that approaches things with humility, that is ready to do the hard work. And man, that's inspiring, right? You know, I've encountered some executives that, you know, want to just sit back and relax and have everybody do the work around them. It doesn't work in a startup environment.
Yeah. And, you know, when you talk about, you know, putting in all this hard work and all this effort, how have you been able to kind of manage and like deal with kind of like the work-life balance?
Oh, you know what's funny? A young woman that manages our internship program, Coco Kinney, she came to me last week and said, oh, we're talking about our mentorship program for the interns. And she says, Chris, you seem to have a pretty good work-life balance. You know, we want you to be able to speak to some of the interns about that. And I was kind of like, in my head, I'm like, really? Do I have a good work-life balance? I had no idea, you know, because it's a work in progress, right? I think, you know, when you're young and you're single, you have time to do things for yourself and to cultivate hobbies and interests. And as you get older, you know, I'm blessed to have a beautiful wife and live in a beautiful home and two beautiful daughters that are 15 and 12, and they keep me very busy. And when they were younger, it was even busier. So the way that I structure things in my life is just that, right? There's a lot of structure in my life. I'm not a morning person, but I wake up at 4:45 every morning to go to CrossFit at 5:30. I do that 5 days a week. I work out with the same maniacs at the same gym in CrossFit Mount Kisco every morning. We're all type A. We're all very successful. We are all executives that know that we can only get our workout in at that point of the day. If I don't do that, I am off. Ask anybody in my ecosystem. If I don't work out in the morning, it's a bad day for me and it's a bad day for anybody else around me. And it's about, you know, understanding your time limitations and then executing on that. And that sort of, I guess it kind of informs your habits, right? So because I get up early, I have to go to bed early. And because I go to bed early, you know, you start this process of, okay, I'm not going to binge watch all of these silly television shows. Maybe I'm going to wind down a little bit more, a little bit earlier in the evening, and all these other better habits start to form. You know, recently, I just, a friend of mine convinced me to do School of Rock, which is, you know, you for 3 months, you join an 18 and older rock band, and they assign you 3 songs or so. You take a week lesson, 1 lesson per week, and then you perform at the end of that. And I did my first performance. I'm 48. It was the first time I was able to perform music in a rock band. You know, I used to play stand-up bass in orchestra for a bunch of years. So I have those 2 things, right? So it's CrossFit in the morning and it's music on the weekend. I have Saturday lesson, and then Tuesday nights we rehearse. And it's just about managing that book of minutes throughout the course of the day. People have more time than they think, Mo. I mean, think about how many times you talk to people and they're kind of like, have you watch Succession? You want to, like, if you do the math and really break down how many hours that series takes of people's lives, and if they, went for a 20-minute run or tinkered on a guitar or a violin or, sat down to try to write a book, it could be game changing.
Yeah, I totally agree. Television could be probably one of the biggest suck ups of time and energy out there.
Yeah.
And social media too, to a certain extent, right? It's like people get overly consumed by it, and then they get stuck in that mode, and they don't realize, the opportunity cost, that they've given up because they were spending time doing that rather than doing something else. Like you said, going to go work out, or even just take a walk around the block. Because people a lot of times are saying, "Oh, I don't have time. I don't have time." Well, it's like, but you had time to do some of these other things, and were they actually more valuable? Did they improve your life? Did they improve your health?
Even watching this podcast, Mo, right? Like, I think that's powerful, right? If you're going to spend time watching TV, this is the power of social, though, when it's used for good, right? Like, I discovered Andrew Huberman through the Joe Rogan podcast because I was listening to that podcast on my commute in. That's another thing too. When you're commuting, you could use that for educational purposes. Like, when I sold my agency, I worked for a company out in New Jersey. I had an hour and a half long commute. And that's actually when I started working out so crazy early. But then I also started listening to podcasts instead of just listening to music, right? So educated myself, learned about guys like Andrew Huberman, and that people that intrigued me. And then, watched his podcast, and like Lex Fridman, watched his podcasts, and, those are, or Jordan Peterson, and those are people that are enhancing your life, that are challenging the way you think about the world. I think that's fun. Or with the guy that does infotainment, I forget his name, Pat something. He's great. He actually just became a part owner of the New York Yankees. That guy shares high-end, high-level, highbrow thinking information. That's I guess infotainment. That's a good way to spend that time. But I do think, thinking about your day in advance and your week in advance is absolutely critical, because, and scheduling the downtime and the playtime is critical. I mean, I'm sure you do. Like, I joke with my team. I always say I have to get outside more often during the day because I have these like pre-made lunches that I bring in order to keep my lunches healthy. And sometimes I don't leave the office. Sometimes I don't go for that walk. So it's good that at least I know that morning I worked out, or maybe that evening I have a band rehearsal, right? You have those two things going on.
Yeah, well said. The structure, and then, sticking to a routine and so forth. I mean, all these things help to kind of keep you on track. And, and then of course, the working out and being able to do the release, and, staying fit, and so forth. All these things, help, oxygenating the blood, for example, right? Oxygenating the blood helps you to think better and helps you to be more sharper. So there's a lot of benefits, to staying fit and exercising.
Sure. Endorphins firing, like endorphins, synapses firing, and then there's community. Like, you meet people when you do these things, and like-minded people will hold you accountable, whether it be actively or passively, right? Like, if you miss a couple of days at the gym, they're like, "Hey, where were you?" And you're kind of like, "Oh yeah," like all of a sudden you're being held accountable by people that are outside of your little, nuclear family, and that becomes compelling and interesting. And then you end up, being in a place where everybody that you involve yourself with is of that mindset. That's fun. That's fun. That's, maybe when I was younger, I didn't realize that, but it's and I do think one of the important things too is, like, when you have a morning routine like that, it's tough to screw things up at night, right? It's tough to have too many drinks on a Thursday night at a thirsty Thursday with the team, right? So you have that second beer, you're kind of like, I gotta go home, I gotta go to bed because I gotta get up in the morning. Otherwise, I'm not gonna have a great workout. So the good habits feed into other good habits.
Yeah, well said. Chris, can you kind of talk about how you became involved with Cormac, Kinney, and Diamond Standard?
Oh yeah, that's a joy to talk about. Gosh, Cormac is the guy that I've been praying for my entire career. Honestly, we found each other on LinkedIn, and it was over COVID, right? It was a conversation like this. I was sitting in his office. It's kind of funny too, because I was like, the first words out of my mouth, I was like, "Dude, I am not a finance guy. Like, I once got a 0 on a stats exam in college. I'm like, why are we talking? Like, this is not my forte. And his response was, you built sales teams, and that's why we're talking. So Cormac is a genius level mind. He is a quant. He's got multiple degrees from Carnegie Mellon. There are 4,000 references to his name in the US Patent Office. He sold his first company when he was still at Carnegie Mellon. He's built 5 major startups. He's sold 2 of them to Fortune 100 companies, Oracle and News Corp among them. This is a guy, this is a once in a career type of individual. He is by far the smartest human being I've ever encountered. I really have never met somebody that has access to both sides of his brain so easily. When you're speaking with Cormac, there are no ums or uhs. He's rarely searching for the word. It comes quickly. It comes efficiently. He's like Occam's razor. When we're all kind of going around like this, he just goes, boom, there. And that's hugely inspiring to work for somebody like that, who is pushing the envelope in both, we're fintech, and we talk about how we are definitively fin and definitively tech. There's, we don't skew heavily in either direction, but we are squarely in both worlds. And that kind of summarizes Cormac's brain, right? He's got this quant mind. He understands technology. He understands how to harness technology in the financial markets and in that world. He's been on Wall Street for 35 years. He's built trading platforms. And when he comes to you with that level of experience, I've been working for a long time when I met him 2 years ago. And I had been running teams, and I ran my own agency for 8 years, and I sold that agency. I wasn't a junior guy when I met him, and I learned something from this guy every day. And I really, really mean that, because his job as the founder and CEO of this startup at Diamond Standard is to kind of grab us all by the back of the neck, pull us all the way to the edge of the cliff, scare the heck out of the C-suite of the company. They're like, oh gosh, we can't do that. And then we course correct to where, we say we could do this. He says you could do that. And we kind of end up here. And I've never encountered a leader that can do that so consistently and with such intrinsic motivation and such stamina. This is not a 20-year-old guy, but this is a guy with the energy of a 20-year-old. And it's because he's so intellectually curious. And this is, in his words, his masterpiece. That, yesterday I joked, this is absolutely a true story. My team, we sit in an open plan office, and there's lots of chatter, which is great because there's institutional knowledge that gets shared, and we're startups, so things move quickly and it's fun and we're laughing together or whatever. I needed an hour. So I went downstairs across the street to the Barnes & Noble, sat in the cafe, and I banged out a couple of emails because I needed quiet. I just needed to not have somebody roll up on me and ask me a question. And we had our executive meeting at 4:30. I walked in, I said, Cormac, I got the best hack ever. I'm like, I just walked across the street to Barnes & Noble for an hour. I got so much work done. And he goes, oh, nobody can find out about this. He's like, but I'll never give up the weekends here. The guy works every weekend at the office, and he loves it because it's quiet and he can think and he can conceive of all of these incredible ideas that he's come up with and all these patents that he has, and do the incredible work that he does because he's jam-packed in meetings. So, yeah, we met each other through LinkedIn, and it's been a really wonderful journey so far. I think I bring things to the table for the organization that not that you probably wouldn't be able to find with a traditional finance background. And we've been very lucky to hire some hugely talented people from the financial world on Wall Street. Yeah, it's a really unique company.
Oh, wow, that sounds very intriguing. Can you talk a little bit about how the diamond industry works and kind of what are the supply and demand drivers out there?
Sure. I mean, look, I'm still a relative newbie, right? I've been learning about it for 2 years, but you know who's not a newbie? Cormac's wife, Mimi So. She's a celebrity jewelry designer, and that's how Cormac found out about diamonds, and that's how he realized that the diamond market was, completely not the best market, right? It was a little bit backwards, right? And by virtue of being married to Mimi, he went about trying to crack the code of opening up diamonds as an asset class and being able to financialize and democratize that diamond asset class. Now, that's not something that you do overnight. That's something that when you realize how dysfunctional the diamond market is, Cormac spent many years trying to figure out how to crack the code. Mimi, in her own right, is an absolute powerhouse. And I tell the story, we were recently featured in FT.com. The same day, Mimi was in People magazine, right? So this is a definitive power couple. And, they joke that Cormac's the software, Mimi's the hardware, right? Part of learning how dysfunctional the diamond market is to understand that there is supply and demand based on diamond mines. What people don't realize is that there hasn't been a new diamond mine discovered in about 25 years. And they're unique. Diamond mines are not like gold mines that if you keep digging deep, you can pull out more gold. They're kind of this cone-shaped volcanic mine. And once they're tapped out, that's it. There's no more diamonds that are in there. So there is a definitive supply and demand issue. But by virtue of taking those diamonds that we acquire around the world, which are GIA certified diamonds, they're pre-cut diamonds. In the coin, it's about 0.17 to 0.75, the size of the diamonds that we put into the coin. Should point this out. That is a Diamond Standard Coin. Each of the coins have the same geological value. And that's part of the breakthrough, because by virtue of our initial public offering in 2021, when we said, hey, Diamond Standard Coins are now available to the general public, that by virtue of doing that and having multiple millions of these coins sold to individual investors, that set the diamond standard. So when they're the same geological value, one coin might have 7 diamonds, another coin might have 8 diamonds, but by leveraging technology that Cormac developed, we know that it's always going to be the same geological value. And the tech portion of that, you guys can see, that white sheath right there is a military grade ERC-20 microchip. Now, the reason why that's important, and Mo, this is one of those things where, without not having a financial background, when Cormac was explaining this to me, the thing that truly resonated for me didn't have anything to do with the diamonds, but it had to do with the blockchain. So when somebody invests in a Diamond Standard Coin, and full well that it has the same geological value of every other coin that somebody's investing in, we then place the coin on the public blockchain. And the reason why that's key is because it tracks the provenance of each GIA certified diamond. So you can then log in your wallet and you could see the actual GIA cert diamonds that are in your particular coin, and where they came from. Now, there's a couple of pieces of technology that are involved there, right? So you invest in a coin, we then go about the business of buying diamonds from around the world. We ingest them through IGI Studios. There's 8 different locations around the world. They then come into the New York area. IGI, GIA certified diamonds, the coins are manufactured in IGI's offices. We don't touch any of that process, right? We're not setting the price. We're not market making. We're not doing anything. But when we buy the diamonds, and this is critical as well, we buy the diamonds through the world's first and only fully transparent diamond exchange. And that is absolutely critical, because those individual sellers know that they're going to get a fair market price from us. And the reason why they know it is because that proprietary technology that Cormac developed through that fully transparent diamond exchange, launching that's ours, that's proprietary. We then take those GIA certified diamonds, input that data into what we refer to as our optimizer, again, proprietary technology that Cormac developed. And that takes a statistically relevant sample of diamonds and says, okay, place the diamonds into this coin, these GIA certified diamonds into this coin, and these other GIA certified diamonds into another coin. And that is a critical feature. And the reason why is if you're a vendor trying to sell me a diamond and the optimizer tells me to buy a GIA certified diamond that is 0.17 carats, let's say, and you say, I'm not going to sell it to you for that price, Chris. I go, okay. And I go to another vendor and I buy that a 0.17 carat diamond so that I can then place that into the optimizer, and the optimizer can say, yeah, you can put that into the coin. We don't care about what it would look like in a setting on a tiara or a ring or a bracelet or a necklace. What we care about is the GIA certification and the carat quality, like the cut, color, all those 4 C's, all of that. But it's not about looking at it through a loop underneath that magnifying glass. It's just that the computer is telling us to buy it in order to make sure that it's a geological standard across the board. So that allows for us to become one of the world's most efficient diamond buyers. We believe that we are the world's most efficient diamond buyer because we don't care, and because it is for the first time in the history of man, a fair market value price for that diamond that we're buying. The vendors love it because they have remnant inventory just like everybody does, right? And they want to be able to monetize and liquidate their inventory, but they know that it's fair market. So they say, okay, they're not going to haggle. We won't haggle. We give you one offer, you don't take it, great, we go to somebody else. And so it's been a huge boon to the diamond side of the business on that vendor side. And it's always helping everything that we're doing. And it allows for us to be able to buy the diamonds at a hyper cost efficient way. And that's our business, right? That's actually the business model. For your viewers, they should view us as a gold mine, right? So it's essentially we're mining these coins, right? And that delta of our efficiencies of purchasing them and the manner with which they're invested in, that's the business model for us.
Wow. So let me let's unpack some of that. That was quite a bit there. So each coin, so those people that are listening in, and you're not watching the video, the coin to me looked to be about like an inch diameter, maybe a little bit more, and about a 1/4 inch thick. And like you said earlier, each coin can have various numbers of diamonds within it. Because at the end of the day, what you're trying to do is create a coin that has a particular geological value. And then you also mentioned about how each coin has a ERC20 token associated with it. So those people that are maybe not familiar, ERC20 is basically is a token that can trade on the Ethereum blockchain. And so therefore now you have a public ledger associated with it, each coin that's purchased. When someone purchases a coin, are they essentially taking possession of that coin if they want, or is Diamond Standard holding it within their vaults or for safekeeping for investors?
It was one of the first questions that I asked Mo, because I was, Cormac held up the coins and I was like, whoa, that's so cool. I get it. That's awesome. I want one. We have a Brinks facility in Delaware, so that if an individual investor doesn't want to pay state taxes on it, they can have it held in that facility. And actually, we have a wonderful relationship with Brinks. They actually built a custom facility just for us because they'd never seen anything like it. They were just like, what are these things? I would say about low 90%, like 93, 94% of our investors do store their coins and bars in the Brinks facility. The reason being, if they take delivery, they then lose access to the token, the digital token, okay? Which is fine. However, the investors that are engaging with Diamond Standard right now, and look, we've sold $26 million worth of these coins and bars. There is an appetite for this investment. There is a huge appetite for the continued democratization of diamonds as an asset class. Because we're regulated by the Bermuda Monetary Authority, because we're audited quarterly by Deloitte, because Cormac did all of these things, between 2018 and 2021, when we were finally had our initial public offering. It was, it's not like an IPO on the NASDAQ. It was just, hey, we can now sell these. Because we've done all of that due diligence, people feel comfortable investing with us. But the majority of those investors realize that this is a hold. This is not something that's a quick flip. We do have a spot market where individual investors can buy and they can liquidate, they could sell. But the majority of them, it's a keep it at Brinks and it's a hold. Because think about it, if you want to, new commodities are not launched. They're just not. Okay. So this is in my mind, it's a unicorn experience, right? And as the timeline goes on, we launched our coins, we launched bars, we launched our fund, we launched the spot market. We have, all sorts of different approvals approvals for our EFT for on the CME, for our the futures contract on the CME. There's all of these things that are going to happen, ETF, et cetera, down the line. These continue to crack open the democratization of diamonds as an asset class. So my mom can invest in it. She can call up her financial advisor and say, sure, I want 5% of my portfolio to be invested in diamonds. It's a very unique investment opportunity for investors like you and me, Mo, because we've never had the opportunity to be this far left on something that's already launching and already doing this hockey stick. So people that discover us are immediately involved and understand that they're in it for the long haul. Now, there was a little bit of a wrinkle to the initial investors who largely very savvy investors that are just interested in diversifying their portfolio, hedging against inflation, and having diamonds as a store of wealth. Some of the people that were investing in like 10, 15 coins would take one for delivery. And we're kind of like, why are they taking one for delivery? So we started talking to them and reaching out to them. And it was just because they wanted one to show their friends because it's so cool. And so what we did was we then reached out to them. We're like, look, you can keep it in the Brinks facility. We'll send you a sample so that you can show your friends the sample when they come over for the dinner party. Don't worry about taking delivery of one. But yeah, the majority of people take it, put it in the Brinks facility for security purposes, but also to have the token so that they could trade the token on the spot market if they wanted. Yeah.
Interesting. And then how does pricing work? I mean, you mentioned about a spot price. Does that apply to each coin as well too? So if I wanted to know the value of my coin at any particular moment of the, let's say, trading day or trading week, that I can go figure out what that is? And is there like a spread as well too, in terms of like, this is what the value would be if I wanted to sell it, and this is what the value would be if I wanted to buy it? Kind of like a market like in precious metals, for example, or other metals.
Yeah, so that if you go on to Bloomberg, we're listed as DIAMX. So again, we're not setting the price, the market sets the price. But if you go on the spot market, yeah, you can see the bid and ask on the spot market. Absolutely. Look, the other thing too is this is a very, very young company. We're all moving at the speed of light. And I mentioned that Cormac founded the company in 2018 and got all of these regulatory approvals, but we have more green in front of us than behind us, right? And part of those things are, the spot market will continue to mature over the course of time. The understanding of how the price determination will mature over time, but we don't touch any of that. I mean, it's just one of those things, like the market dictates it. You come in, you create an account, you choose an investment vehicle, you go through KYC for the coins and the bars, and we mint the coin, it gets shipped. The things that will impact diamond prices are the same things that impact gold and silver and palladium and rhodium, and all of these other precious metals. What your listeners or viewers should be well aware of, and this was another sort of light bulb moment for me, of those precious metals that I just kind of rattled off, like silver, gold, palladium, rhodium, about 15% of all of the mined precious metal is held as an investment by individuals or banks. Gold is higher. Gold is closer to like 40% of all the gold that's been mined is held as an investment by banks, et cetera. But silver, palladium, rhodium, about 15%. Now, there's $1.2 trillion worth of diamonds that have been mined out of that finite number of diamond mines. Less than 2% of those diamonds are held as an investment. So our business thesis and our green pastures as an investment, and this is what I tell people that are thinking about investing in a coin or a bar, is the delta between the 2 and the 15%, right? So the assumption, the thesis that Cormac has is, okay, that's the business. We're not planning on financializing 100% of all the diamonds that have been mined. You know, you get people like, oh, that's such a shame you're putting those diamonds into these, you know, wafers. That's so, why would you do that? Well, these are the investment class, and the diamonds that you're wearing on your ring, around your neck, or in your ears, those are for beauty. And there can be a difference, right? So 2% of the 1.2 trillion right now, the delta, you know, that's a $200 billion market. I'll take it. You know, that's a pretty substantial green pasture, as well as for investors that understand that market conditions will sort of even out across the board, across the different investment classes, across the alternative class, that things sort of regulate themselves. And by virtue of the market doing that, it makes sense, right? Okay, silver as an investment class, about 15%. Palladium as an investment class, about 15%. Rhodium as an investment class, about 15%. Diamonds have now been cracked open as an investment class. Maybe it takes us 5 years, maybe it takes us 10 years to get there. But that's what investors that I speak to, who are the smartest, that are, you know, self-directed in their investment choices, that's the number. Those are the numbers in the scenario that when we speak, that really, the light bulb goes off for them. They're just kind of like, okay, this is the beginning stages of unlocking that 2% to 15% delta.
Got it. For investors that kind of like realize that delta that you just spoke about, what about it also in terms of like correlation? Like how correlated is this asset class in relation to like traditional investments like stocks and bonds?
So almost no correlation. And what I didn't know, and that Cormac taught me, you know, Cormac talks about being a quant and being, you know, like dealing with hedge funds and the hyper sophisticated investors. That's a hugely appealing thing, the non-correlation. And that is, you know, something that has brought in a lot of investors to Diamond Standards because it's not correlated. Now, what everybody should keep in mind, and I'm sure, you know, again, I'm not a finance guy, but as we continue to grow, that will change over time. But right now, it is absolutely not correlated, almost at zero. So becomes a hugely appealing aspect of the investment class.
Yeah, and for those people that are looking to diversify their portfolio and to maybe have some dampening effect if they're heavily weighted or if they're primarily involved in traditional investments like stocks and bonds and so forth, right?
Well, what happens, Mo, is we're very lucky that we have a great relationship with many of the investors that are dealing with us because, you know, it's an informed investment, right? You're not just doing it on impulse. You know, I think the coin is just a touch under $5,000 today. You know, it's not an impulse buy. But when those investors spend the time and effort to investigate what's happening here, and they come to us with a plan. They come to us with their investment thesis and philosophy. And those who are interested in alternatives, those who are interested in educating themselves and, you know, paying analyst platforms like Stansberry Research to gain access to their analysts and to help, you know, take their self-directed IRA and invest based on the recommendations. That mindset, that's what they're looking for. They're looking to diversify their portfolio further. They're looking to have new and interesting ways to store wealth that are relatively insulated from some of the uncertainty that's happening, globally in our economy, in our culture, just everything going on. Other than just investing in gold, which is wonderful. We love gold, but the people that come to us are absolutely of that mindset, as I'm sure you are, and I'm sure your listeners are, in order to protect themselves from the volatility of the markets.
Yeah. And what are the types of risks? Every investment, anything that you put your money into, there's always risks associated with it. Are there very kind of nuanced or very kind of asset specific risks that people should kind of know about or be aware about when it comes to diamond investing?
From my perspective, it's just like every other investment. The markets dictate where the investment is going. From where I sit, there's nothing where the bottom is dropping out of a diamond investment. That just won't happen from my perspective. I think it's just as risky as investing and diversifying in silver, palladium, rhodium, or gold. Which to me doesn't sound very risky. It's not a hugely volatile price point. If you go to diamondstandard.co, you can track the price history of the coins and the bars. We do have bars that are 10x the coins, and we have the ability. And I should mention, you don't need to be accredited to invest in the coins and the bars. You do need to pass KYC. We do have an investment vehicle for accredited investors, and that's the fund, which is $100,000 minimum to invest in the fund. But the volatility is, mimics whatever, other commodities investments.
Great. And so you'd mentioned about the coins, the bars. And so just to be clear on the bars, you said that is essentially like a 10x. So it's essentially like whatever the value of a coin is, each bar would be basically 10 times that from a geological value, correct?
Correct. And it is fascinating. It's a computer science rationale, right? Like that's the foundational elements of everything that's occurred here at Diamond Standard and born from, Cormac's beautiful mind, literally. And I know I sound ridiculous, like he's this deity, but the guy is just at a different level. And, maybe one day we'll get him on here as well. I think that would be a compelling conversation, but it's everything that we've done is based in computer science. And so the numbers work out that it is a 10x versioning, and it is absolutely aligned with the coin and the bar.
And the fund is available to anyone, not just accredited investors. So is that essentially set up as like a Reg A fund?
The fund is for accredited investors only.
Okay,
so you do have to be accredited for the fund. For the coins and bars, you don't have to be accredited, but that you still have to pass KYC. And then the minimum for the fund is $100,000.
Gotcha. Okay. And so for people that are interested in learning more about diamond investing, how do you suggest or recommend they get started?
So we have a plethora of information on our website, which is diamondstandard.co. And if they would want to reach out directly to a sales associate, individuals could just fill out their information on buydiamondstandard.com. So two separate websites, right? Diamondstandard.co, they can go there, they can download our diamond marketing guide, they can read all the news, they could read the articles. We've been covered by the Wall Street Journal 3 times. We were just recently in ft.com, as I had mentioned. You'll see Cormac on Bloomberg, on CNBC, on doing all sorts of media appearances. If they want to do a deep dive to learn, still to this day, Keith McCullough from Hedgeye did a hugely compelling interview with Cormac over 2 years ago, where it's a full hour and you get, his Cormac's thought process, the entire story arc of everything from Cormac's perspective. And if your listeners want that, I do recommend that, they can go to the website. It's on our website, but if you're a fan of Hedgeye and Keith McCullough, who's phenomenal, he's another beautiful mind. And you you could see it kind of clicking for Keith as he was talking to Cormac, and that's a really exciting interview. So diamondstandard.co, or if they just want to fill out first name, last name, email address, you can go to buydiamondstandard.com.
Okay, thank you. And for people that want to find out more about you and Diamond Standard, should they just go to those same URLs that you mentioned, or any other resources or any other links that you'd like to share as well too for people?
Yeah, I mean, that's pretty much it. If you go to, they hit diamondstandard.co, we have all of our social outlets there. We're very active on social media. If they go on LinkedIn and they search for Diamond Standard, they could find the corporate identity on LinkedIn. And we do regular webinars. Cormac hosts the webinars, so that's compelling. We do have webinar recordings on our YouTube channel also. And I recommend that people spend the time, if they want to engage with diamonds as an asset class, educating themselves first, right? And we have a plethora of information about the company, about our regulator, about everything in terms of the legacy of Diamond Standard, what the massive amount of work and research and effort that has gone into unlocking diamonds as an asset class, as well as our plans and our path forward.
Well, thank you. And then we'll include links in the show notes to this episode, to the websites that you just mentioned as well.
Super.
Chris, thank you for coming on to the show today.
It was a blast, Mo. Thanks so much for having me.
Yeah, thank you for coming on. I really appreciate you sharing your insights with the audience. And that's all for today. And thank you for everyone for tuning in. And until next time, have a great week.
Thank you for tuning into this week's show. If you are interested in learning how alternative investments can help you build purpose-driven wealth, sign up on the High Rise Capital website to receive our monthly newsletter and free investor ebook. Lastly, if you enjoyed this episode, don't forget to subscribe and leave a 5-star review. Thank you for listening to Purpose Driven Wealth, the podcast for empowered investors.